on, everyone? Welcome to another video. Today's December 20th. In today's video, I'm going to be talking about Adobe, quickly highlight their Q4 FY22 income statement, and then I'm going to be jumping into option strat and walking through some option strategies that you can utilize in today's market on Adobe. Quick reminder, if you could like and subscribe, that would be massive for the channel. If you have any stocks you want me to cover in future videos, feel free to comment down below. Be happy to highlight them in future videos. Again, always use App Economy Insights. Shout out to them. Love the visuals. Definitely check them out on Twitter. Now jumping in, looking at Adobe, quick highlights. Their Q4 revenue is $4.5 billion, up 10% year over year at an 88% gross profit margin. Looking all the way down at their net profit, it came in at $1.2 billion at a 26% margin. It's also pretty crazy to look at the digital media stream of revenue that they have. That's at a 95% gross margin. So those are the quick highlights from a financial income statement standpoint. I quickly want to look at the recent chart of Adobe. So to do that, I'm going to look at Yahoo Finance. Key metrics to look at before we jump into the chart. Adobe is currently a $152 billion market cap with a price earnings ratio of 31.5 almost, and a one-year target estimate of 387 according to Yahoo Finance. And as you probably saw on the quick chart, there was a big drop off after the acquisition of Figma was announced, and then recently they've been kind of steadily increasing, kind of somewhat stabilizing around the 330 point, and earnings just came out 5 days ago, which is why I want to talk about it. So looking at this chart with some more technical analysis, you can see Adobe's still below the 200-day moving average of 376, and the Bollinger Bands are tightening, and it's kind of trending upwards slowly. So it's worth noting when we jump and look at the option strategies for Adobe. In my opinion, we're still in a bearish market, so definitely have to take that into consideration. So I'm going to walk you through option strat here and go over the option strategy that I personally think you could utilize, but this is just my opinion. So it's going to be a bear call spread, also known as a call credit spread. So the reason I'm doing a call credit spread is because, yes, Adobe's increasing the stock price slowly, but I think we are in a bear market and there's a potential recession. So I'm going to utilize this bearish strategy to create additional income. So what you're going to do is you're going to do two things. You're going to sell a call and you're going to buy a call. In this example, I'll walk through a couple of strike prices and walk you through the scenarios. So first, you're going to need to pick your strike price. You could do a strike price of 4 days from now, but you won't collect much premium. Or in my opinion, what I like doing is about a 1 month out. So January 20th, about 32 days out from now. Then you're going to choose the strike prices. So you're going to be doing two options, like I said. You're going to be selling a call and buying a call. So what you're going to do is you're going to sell a call. So in this example, I'm going to sell a 350 call. And you may be thinking, oh, I thought on a covered call you have to have, all of that collateral to sell a call of 100 shares. So you may be thinking, oh, I thought you need $35,000 to sell this call. If you're selling a covered call, that's true. But in this scenario, we're not selling a covered call. We're doing two options. We're selling a call and buying a call. So effectively, you're going to collect this 623 premium on the first leg of the option, but then you're going to be paying for this call 5 points higher, 493. So effectively, you're going to be collecting today $130 and only putting up $500 of collateral or margin. So that's almost a 25% return in 32 days. And remember, this strategy is saying Adobe's not going to go above 350 in the next 32 days. You may be thinking, yeah, we're in a bear market, but there is a slight chance that Adobe could steadily increase and in 32 days maybe be close to that. Okay, that's fine. We can be a little bit more conservative and I'll walk through some strike prices and we can see where the option premium is going to land for those. So in the next scenario, if I'm a little bit more conservative, I'm going to choose a 370 and let's say a 375. So looking at this, we're going to sell a 370 call, collect 239, but then we're going to protect ourselves in 5 points higher. We're going to buy a 375 call and pay $1.86. So that's going to result in a net credit of $53, and we're going to be putting up $500 of collateral or margin per se. That's over a 10% return in 32 days. So that's actually not too bad. You have to think, is Adobe going to go up, 13% between now and 32 days? Now, if you completely disagree with me, that's totally fine. I can quickly walk you through an option strategy that's a little bit more bullish on Adobe, but won't require, $30,000 to sell a covered call or anything. So we're going to look at a bull put spread, also known as a put credit spread. So it's kind of the opposite of what we just ran through. Now remember, you need to choose the expiration date. So we're going to keep it at January 20th, 32 days. And you're going to do two options. You're going to sell a put, and then you're going to buy a put. So now in this scenario, if we're saying, okay, we're bullish, Adobe is going to continue increasing, there's a slight chance it may come down if, the recession and all of that impacts the stock. So we'll sell a 315 put, and then we'll buy a 310 put. So what's going to happen here is we're going to sell this, we're going to collect $800, but it's simultaneously, on the same date, we're buying a 310, so we're paying $655. So what's going to happen here is we'll collect $145 today, and we're only putting up $500 of collateral. It's almost a 30% return in 32 days for this bull put spread. So again, this is definitely if you're bullish on Adobe. This is just an example. Feel free to utilize this. Hope you learned from this example. Thanks for listening in. Hope you liked the video. If you could like and subscribe, that'd be amazing. Feel free to comment down below any stocks you want me to cover in future videos. We're happy to run through some option examples for them. Have an awesome day, and I'll talk to you soon.